thank you everybody for joining us for this evening's event called Lockdown and Financial Wellbeing. Thanks for joining and giving up a portion of your evening. We all know how precious our evenings are now, so thank you if you've parked a programme or a quiz or some Zoom drinks, very much appreciated. My name's Izzy and I work for Habito. And you may or may not have heard of Habito or indeed know what Habito does. So I thought I'd just give you a very, very kind of quick snapshot into who we are before we go into this evening's panel discussion. So we are the nation's favourite mortgage broker, something we're super proud of. We're free and online. We're a mortgage broker that's been around for around 4 years, and we're innovating and doing different things with the mortgage industry, things that didn't exist until we came along. And we're really proud that we're helping people to use their mortgages more dynamically, save money where they can, whether they're buying their first home, whether they're remortgaging, which is getting a new mortgage to either save some money or perhaps look at doing a home renovation project, or whether they're moving home altogether. We're really passionate about mortgages and making them easier for people, because homes are really important to people. After friends and health and family, homes are the most important things to us. And even though people might not get excited about the mortgages themselves, they are a means to a very important end. So there's lots to talk about with mortgages, and a lot has happened in I'm just seeing a couple of notes. I think people are coming on still. Okay, well, at least people are coming in. If there's anything we've missed or you've missed and you just joined recently, we're recording this session, so you'll see it all from the beginning from tomorrow on YouTube. So, but we'll be covering loads of stuff tonight, so don't worry if you've missed the first couple of minutes. I was just saying that lots has happened to the property market in the last few weeks. You know, it's changed incredibly quickly, sometimes overnight. And there's lots of new stuff to update everybody on in terms of movements in the mortgage market, which has led to a lot of confusion and people really worrying about their finances and their personal situations. And Cassie, who's our VP of Operations, is going to talk to you loads about her experience at Habito and what she does and the things that she's seen and her team are dealing with kind of on the ground every single day. So I'll leave her to kind of go into all of the kind of key practical details and advice there. But yeah, financial wellbeing has become so important in the last few weeks. It always has been, but now more than ever, there's just so much going on, and it's really kind of top of mind for a lot of people. And we've been asked a lot of questions ourselves, and I know Kat has too. So we thought we'd kind of come together and put on this event and hopefully tackle some of those worries, those concerns and queries that you guys have got. I thought I'd also mention that we've known Kat for a little while now. She actually came to us over a year ago for her remortgage, and thank goodness we did a good job, because we started talking afterwards and realised that we had lots in common, and decided that one of the things that we could really help kind of lift the lid on was self-employment and people looking to get kind of access to mainstream financial services. Being self-employed or freelance, it's really tricky. So we did a really great event last year, a panel event, bringing people together to talk about what it means to kind of, you know, save and spend when you're a freelancer and you're self-employed. And given the last few weeks and how much has changed, we got back in touch and decided that actually it'd be a really good time to bring people together again and talk this time about the current situation, the coronavirus crisis, and what it means for us and our financial well-being. Before the panel kicks off, and I really hope it's going to be super informative and really great for kind of practical tips and advice, just wanted to say a couple of things in terms of housekeeping and a bit about the format for this evening. So we've hopefully created a really safe space for everybody to share, and thank you for your questions that you've been sending in advance. We hope that you'll get lots of practical tips and advice on how to kind of get your home finances into shape, where possible save some money, how to manage money going forward. But just to kind of caveat that what you hear in the next hour is not kind of specific regulated mortgage advice for your personal circumstances. It's general guidance and tools and tips. If you do need to speak to a broker, or you want to speak to a broker to check out what that means for your personal circumstances, please do so. We'll put a load of resources together at the end of this event and put them up on social tomorrow. We'll be sharing a number of resources via email as well. So if you would like to sign up for that and our newsletters, please do so. You can do that via the email that you were sent to get access to this event tonight. You can also, if you want, and if you haven't asked a question already, you can use the Q&A function at the bottom of your screen. If you just click on that, you can post a question and we'll try and get to it. And as I said, we'll be recording this end to end, and we'll be posting it on our Habito YouTube channel from tomorrow. So please rewatch it, share it. It's there for everybody to use. And without further ado, I shall pass over to Kat and the panel.
Thank you, Izzy. Thank you, everybody, for turning up, and thank you to Habito for kind of making this possible. My blog, Not So Smug Now, has always been about breaking boundaries, being honest, saying stuff that other people feel uncomfortable talking about. For some reason, I don't have that problem, much to my husband's annoyance quite a lot of the time. But I think money is one of those things that we probably feel the most uncomfortable talking about. As Izzy says, I've worked with Habito before. I did go to them before any kind of relationship was kind of between us to remortgage, and found the experience really just life-changing, because before mortgages had just been so boring, and Habito somehow made it sexy, and they made it sexy because it was convenient and it was easy, and I didn't have to go to somebody's boring office. I could do it at 9 o'clock at night when the kids were in bed, and so it just was a game changer. The advice was great, it was really helpful, super personalized, and so it made me think, actually perhaps it's something we're not talking about as much as we should do. That being said, money wise, I'm going to be honest, right now on a personal level we are what's the word, screwed, you know, and it is, I think we're in a very similar position to a lot of people. I've got the blog, which is monetized to a certain extent, but it's only a small portion of my income. The company that I co-founded with my business partner, Gail, Hustle and Fox, that's all about bringing people together, face-to-face connections, events. So that's obviously not really operating at the moment. My husband is a musician, so 90% of his earnings come from live touring. That's not happening, and 90% of the live touring happens between sort of February, March and September, October. So financially for us, we're in a really difficult position. I'm a sole trader, he's a limited company, and it's genuinely a really scary time for us. We've taken the mortgage holiday, and we do have some savings in the bank, but that's for tax payments. And as much as there's tax holidays, eventually we're going to have to pay that tax at some point. And this could feel a bit like I'm oversharing, but I think it's really important for us to be honest, because I think the well-being element of this event is the most important bit to me. You know, I hope we get more than that out of it, but even if the one thing that people take away from it is that they are not alone, if they're at home feeling like they're failing because they can't pay bills or they don't know where their next paycheck's coming from, they're not on their own. So many of us are in that situation. And that was kind of the key to this event for me. So I really hope that it serves to make people feel that they can, that they know that there's somewhere they can go and ask for help, that there are options, but also that it just unplugs some of the crazy around all the policies, because, you know, policies are changing every day, directives are changing, systems that are designed to help us are changing every day. And if you've got kids and you're homeschooling and you're trying to work or find work, it's just too much for us to sit down and go through all of this stuff sometimes and figure out what works for us and what doesn't. So I'm really excited about unpacking all of this with people who know way more about it than I do. So remember, as Izzy said, you can continue to submit your questions. We've got your questions. We're going to answer as many of them as possible. If we don't get round to them, please feel free to get in touch. Keep getting in touch with us afterwards. We'll try and get everything answered. But with that being said, I'm going to hand over to Cassie from Habito, who, if there's something that you don't know about mortgages, then it's not worth knowing, right?
What an introduction.
No pressure.
exciting world of mortgages. So hi everybody, I'm Cassie. I'm the VP of Operations here at Habito. So just a little bit about me. So I oversee and direct the customer facing and brokerage side of Habito. So basically ensuring that service and mortgage advice is exceptional and really helps our customers find home. So we're free to use. We're an online mortgage company with qualified brokers giving regulated advice. So what that means is we look at the whole situation, compare that with thousands of products on the market, and use our knowledge of how lenders view different situations to then make a recommendation. And if you go with that product, we package the application up and we act as that go-between between you and the bank. So it means you're not on hold for hours, but we are for you, I guess. Now, most brokers actually charge a few £100 fee for doing this, but because we're tech-based, we don't actually need to charge that fee. And as with all of the brokers, we actually get paid a fee directly from the lender instead for sending them the case, which is great. So I guess, you know, this has impacted us as much as everybody else, and we've been working from home now since March. I think I'm in week 6 or 7, but it's a little bit blurred. And we actually are already set up to operate remotely anyway. The brokers within the team and our customer experience team actually work remotely already anyhow. So they work evening and weekend shifts from home, and some of the roles are actually 100% remote working. But right now, of course, not many people are moving home. So really, we want to be here to give homeowners tips and information about what's happening in the mortgage market and how to save money, as well as help anyone with their remortgage as well. So I'll just quickly also go over the key changes since lockdowns happened. So everyone who owns a home, always in the process of buying a home, has been affected. So the property market slowed right down. It is possible to do things, but of course estate agents are shut and things like conveyance and valuations are taking longer to do, and they're sometimes not even happening at all. So the mortgage market has changed beyond recognition. It's a little bit crazy to say the least. There are now fewer mortgage deals on the market. The lenders are rushing to adapt to the current situation. They're not allowing sort of in-personal valuations, so someone physically coming to your home to do a valuation. And we've had 2 interest rate drops as well. So all in all, it's been, as I said, a bit of a crazy time. People have also seen their income take a hit, and many have been furloughed or lost their jobs. So this is naturally a time to conserve cash. Mortgage payment holidays were among the first COVID measure to be rolled out as well. And that was to help take the pressure off. And nearly 1 in 9 mortgage holders have taken a mortgage holiday of up to 3 months. So to put that into more context, that's the banks approving 61,000 applications every day for the last few weeks. So to say they've been busy is like an understatement. And a huge 9 in 10 mortgage holders are eligible for a holiday as well. So as welcome as these measures are, this has led to a lot of confusion and questions, hence why we're here this evening as well. So I guess 1, the practicalities, like how does this actually work? And 2, the future, so what does this mean in the long term? So for many banks and lenders, it is roughly still business as usual, albeit slower, as their working hours have been impacted as well. They're having to adapt to a new normal. So a lot of them are trying to work from home. We definitely went through a few weeks initially where service levels just slowed right down because a lot of them weren't actually set up to work from home. So it's been much harder to get through on the phone to customer service teams, but they are adapting. We've seen a lot of lenders offering mortgage payment holidays online, for example, when they didn't do it before. So hopefully we can provide a lot of answers and clarity and a bit of reassurance tonight as well. Back to you, Kat.
Great, thank you. And we also have Laura, who is a freelance journalist, has been a Times columnist, and is the author of the book Money, a User's Guide, which I actually bought in preparation for this. And I really love it because you can dip in and out of the different chapters. You don't have to read the whole thing, which was brilliant. But Laura, tell us a little bit about yourself, what you know, and what we're going to be talking about tonight.
Yeah, sure. Hi, everyone. So I've been writing about money as a journalist since the first financial crisis. So I joined the Times a few weeks after Lehman Brothers collapsed. And in 2018, I wrote the book Money, a User's Guide as a sort of 10 years on from the financial crisis. How has it affected mainly under 40s younger people, and what do we all kind of need to know about personal finance? How do we navigate all the jargon to make ourselves feel better? Because so many people are still recovering in 2018 from what happened the first time round. And obviously now, suddenly we're facing what could be even worse financial crisis and recession. So I think more than ever, we need to feel, like you said, Kat, more comfortable about talking about money, and also getting our head around things like tax, mortgages, savings accounts, pensions, boring stuff, but stuff that is really, really important at the moment, because we're all really worrying about money and can't afford to, lose any more than we are already. I personally am self-employed, so like everyone who's self-employed in particular, am facing work being put on hold or paused. And I think one of the hardest things at the moment relating to money is it's so uncertain. So when it comes to things like working out how to budget, working out how to balance your incomings and outgoings, it's hard enough normally, right? Especially if you're self-employed. But right now, we're looking at a situation where none of us really know when our incomes will return to normal, if ever, how long we're in this for, which is making it quite challenging to for me personally. I think for a lot of people in the same position, how can you work out how much you can afford to spend if you have no idea how much money you got coming in the next 3 months, 6 months, year? So I've been doing a financial audit on my own money, just looking at
that makes me nervous.
I know. So just looking at what I can really, really cut back on, what my absolute minimum outgoings are, and what I can survive on, I would say, until the end of June. So I'd recommend everybody does that. Just like, don't bury your head, try and look a little bit at what you've got still to come in potentially, but mainly what you've got going out, what you can't avoid. So maybe that's your rent, your mortgage. Even if you take a rent or mortgage holiday, you're still going to owe it eventually. Your bills, can you cut back on any bills? I've been looking at my mobile phone bill, all my subscriptions that I've signed up to that now don't seem as urgent as they did. And also, I think it's really important to try and get your head around some of the government schemes. There are good schemes out there, but there are people falling through the cracks. So the two big ones are the job retention scheme, which is for anybody in a UK company. It doesn't really matter how much money you earn. If your employer decides to furlough you, you're entitled to some money from the government of up to £2,500 a month. If you're self-employed as a sole trader or a partnership, you can apply for the self-employed income support scheme, where equally you're entitled to up to £2,500 a month. But unfortunately, that is for people who earn up to £50,000. So that's capped in a way that the furloughing scheme isn't. I don't know if you want to go into a few more details about that within a Q&A, because I think one of the biggest questions that I'm getting a lot at the moment is, if you work for a limited company like your partner, Kat, what can you do? A lot of people consider themselves to be self-employed, but because they've got a setup as a limited company, they aren't going to be able to apply for the self-employment scheme. But even if you're a director, you can apply for the job retention scheme instead and furlough yourself. So I think it's important to try and understand whether it's worth doing that. I'm happy to go into a bit more detail, or we can see if there's any specific questions on that area.
Perfect. We will definitely will be going into that. I was bombarded with questions about self-employment and limited companies and all of that stuff. So it's definitely something we'll talk about. But first of all, just to go back to you, Cassie, the other thing that came in time and time again about questions was this idea of the mortgage payment holiday. And it was, as you say, one of the first things that came out. It's up to 3 months. First of all, the question is, should you take a mortgage payment holiday? I mean, some people will be able to afford to pay their mortgage, but could still be eligible to do it. Should they take one? And then also we were asked, is it only going to be offered for a limited time? And are you only permitted to take it once?
Okay, cool. So I'll try and link all of that in. Just a little bit of context. So latest figures from UK Finance show that 1.2 million customers have taken the payment holiday since the coronavirus crisis began. 1 in 9 of all mortgages in the UK, so it's quite huge. Just for a reference as well, a mortgage payment holiday, just in case people don't know, it is when you agree with the bank to take a break from paying your mortgage for up to 3 months. So you literally like pause your payments, had nothing coming out of the bank. It is a feature offered by most lenders, normally anyhow. Some lenders do, some lenders don't, it depends. And it's very dependent on your circumstances if they agree to one for you as well. Generally, it's as if you're up to date with your payments, you don't have any great credit issues going on, etc., but very dependable on your circumstances, as I mentioned. I guess at the moment you should take it if and when you need it. So I guess if you don't need a mortgage payment holiday, try not to take one. If you do, look into what that means for you. So there's no impact to your credit scores, but a missed payment, the missed payment that the payments that you're not doing will be added onto the end of your term. So I'll come on to a little bit more of that shortly. But at the moment, the maximum, as we said, you can take is 3 months. You can ask for shorter though, so you don't need to take the full 3 months. After 3 months, your lender will continue to assess your circumstances and agree on a manageable way for you to make up the deferred payments. So there's a few different options. And that could mean extending your mortgage term or altering your mortgage payments. So if you want to keep your term the same, they might just like bump up your payments. We do have an online mortgage calculator, which I'll very quickly do a screen share with you to show, which will help. 1 sec. There we go. Pop to thehabito.com, and just down here on the right is use calculator, so the mortgage holiday calculator. So this is basically going to talk you through the mortgage holiday calculator. So if you need a temporary break, as we mentioned, you can ask your lender. If you need more information on that, there's a really good link here which will tell you all about it. And I'll just quickly talk you through how to fill it in. So your initial term started. So what that basically means is when you last remortgaged, or when you actually if you've recently completed, when was that? So let's just say for this case, it was July 2019. How long is your initial term? So you'll generally know that it'll be 2, 3 or 5 years is the usual thing. What your mortgage amount is. So this will be the amount that you initially took out with your mortgage for. If you're not sure of any of this information, you do get a yearly statement from your bank. So basically it'll have all of the information on here. So your current balance, the mortgage term. So we'll say the mortgage amount's about 500,000 and mortgage term, say about 25 years. The interest rate you're paying right now, as I said, that will also be on your statement. So let's just for argument's sake say it's 1.75. And how long a mortgage holiday would you like to take? So as we mentioned, it's 1, 2 or 3 months. So let's go for the full 3 months on this scenario. And then you'll see just up here on the right that this will give you an idea of what that means for you. So it's saying it's around £20 a month more for their payment holiday, and that you'll add an additional £4,000 to the mortgage over the lifetime. So it's not like a lump sum to pay now. As mentioned, though, this is just an estimate, and it is always better to speak to your lender directly because they'll give you a much better idea. So feel free to have a play about with this. You can put whichever information you want in there. It doesn't need to be exact, but as close as you can get would be great. So I hope that gives you a quick insight there of a little bit of tech that we've done for you to help with that. And I'll just find my document again. There we go. Cool. So to get one, as we said, you need to speak to the bank. Don't simply cancel your direct debit because they need to be able to still take that payment from you, obviously. And if you're looking to save money instead of a mortgage holiday, you could remortgage or do a product transfer. So some banks will let you do a product transfer whilst you're in the holiday period. Basically, very quickly, product transfer means switching the rate. So it means you're staying with the same mortgage provider, but you're going from one fixed rate to another fixed rate. So switching to a better deal. It should usually be a better deal. But it's worth checking the policy before requesting the holiday if you're able to do that. Other options could mean also switching to an interest only. So Barclays, amongst other banks, are saying why not shift to interest only for 12 months. That would bring your payments down, sometimes in like half the payment, and the benefit could last for years as well.
And are we only going to be, is it only a limited time? Do you think they're going to sort of clamp back down on the amount of mortgage payment applications are being accepted as we kind of come out of lockdown? Will people still be able to do this in 6 months, 8 months, or is that a question we don't actually really know the answer to yet?
Don't really know, to be honest, Kat. I mean, the same 3 months at the moment, but if this goes on longer, I guess they'll reassess it at that point. But other than that, I know probably as much as everybody else at the moment on that one.
And in terms of whether you're allowed to take the option more than once, so because we don't know how long this is going to go on. If people use up their 3 months till July, but are still really struggling in October, November, December, will they be allowed to do it again?
Again, not 100%. Usually a mortgage payment holiday is something that you would only take once in a blue moon. So general rule of thumb is they'll maybe let you do it once every few years, if that, because of the impact it has on your payment. So if you think every time you delay the payment. However, given current circumstances, again, who knows? If this goes on, I imagine they'll continually reassess it.
You mentioned remortgaging, and remortgaging is often sort of touted as the best way sometimes to borrow money. Is remortgaging something that people could be looking at right now as a way of kind of releasing some cash to help them through right now, or even if they just need to remortgage, is now a good time to be doing it?
Yeah, definitely. Yeah, I mean, if you're at the end of your fixed rate period, so say that 2, 3 or 5 years that you've had the rate fixed for, then yes, don't let yourself go into SVR, standard variable rate. So that's the rate that you would fall onto from your fixed rate. Monthly payments could jump hundreds of pounds. So our research actually shows that the average household saves about £300 a year by, £300 a month rather, by remortgaging to a lower rate. So it's quite financially impacting. It's over £3,500 a year. Deals are still available, so albeit it does feel like it might be harder to get a mortgage, remortgage and product transfer deals are still there, and banks are actually continually reintroducing products at the moment. So we're continually working with the lenders every day whilst these new products come back in. Or as I said, you can look at product transfer. So that, as I said, that does mean just switching to a new rate with your current provider. It involves a lot less ID checks, no valuation either, which is a massive plus. No affordability check as well, as the lender has still got your current information when you applied for the mortgage. So a product transfer can generally be done in a few clicks. It's very, very easy, but just to be aware, it might not be the cheapest deal in the whole of the market. So our top tip is to use a broker. So we often get exclusive rates with lenders, for example, even with your current provider. So we might be able to get a better deal than you going direct. And we will also look at the whole of the market, and it might be better for you to go with a different provider. Depends on what your circumstances are, but you can still get a very good deal for a product transfer if you go via a broker as well.
And also, while we're on remortgaging, lots of questions about people who have been furloughed, so are currently only earning 80% of their salary.
Yeah.
Is that going to affect their mortgage or remortgage applications?
Yeah, so it is obviously a really big issue. Lots of people are finding themselves in that situation as well. It is going to potentially impact applications. So 1 in 4 UK workers, more than 9 million people are expected to be furloughed during the crisis. 2/3 of British businesses are already using the scheme as well. 1 in 3 companies have put at least 75% of their workforce on furlough as well, according to the British Chamber of Commerce. So the way lenders are actually treating differs from lender to lender. So the way they're treating furlough. Most, for example, will only take your furlough income into account, for example, at 80%. Most of them won't take variable income, such as commission, overtime and bonus. So the total borrowing amount is likely to be reduced. So if you've got a mortgage already, nothing changes unless you're furloughed and you'd like a mortgage payment holiday, in which case, as I said, contact your current lender or a broker. And if you're in the process of getting a mortgage, or depending on where you are in the process, could impact your offer. So say if you're just about to go to offer, lenders can actually withdraw their offer if your circumstances have changed or the mortgage is unaffordable. So speak to a broker, speak to your lender about how it may affect you and your offer.
Amazing. The other thing that obviously a few people are asking about, nobody knew that COVID-19 was coming. People were buying and selling houses. If people have offered on a house that's been accepted, should they go through that? And the same for people who have accepted offers on sales. Is it something that they can continue with, or should they be waiting until COVID-19 is done and dusted which who knows what that could be.
Yeah, exactly. I guess it depends on where you are in the process. If you're still considering about putting an offer in a property, everything is still uncertain. So house prices may fall. There may be less listings in the market. It's much harder, obviously, to view homes. So it's most likely you'll be forced to hold off. But I would say, like, use this time to research on locations, areas, type of home, improve your credit score if possible. If you're looking to sell your current home, you could do this, use this time to do a little bit of DIY, start the garden out. I know a lot of people have been doing that by the looks of Instagram. Use this time to get up for selling and buying a home, basically for when the lockdown lifts. If you were further along the process though, so you might have hit some stumbling blocks. So we've seen huge delays with valuations, as I mentioned. So albeit physical valuations literally have come to a grinding halt because no one can go into someone's home, we are still seeing automatic valuations, which can be still done on some properties. Very unlikely if you're a first time buyer, or if you're a next time buyer moving as well. We're seeing, obviously, because of that, we are seeing cases move to the next stage, which is usually conveyancing, where you start engaging with solicitors. Everybody's working from home anyway, so things are taking naturally longer. But the government has said that transactions don't need to fall through. It's just a case of pausing it and seeing what happens next.
Okay, and moving on that, if people have kind of completed, are people still able to move house?
Yes, they are. But we have said, obviously, you basically just got to be a little bit careful with moving. So it's a personal choice about risk, if you want to move or not. If your home is currently occupied, then we do advise, obviously, just to look at the general guidance around social distancing, and that's really as much as we can sort of advise people on.
And then finally, oh, sorry.
That's okay.
Finally, before we move on to Laura, what is your prediction for the housing market following COVID-19? Is this something that once we get back to normal, it's going to pick up? Are we going to see, is that the $1 million question? You know, can you tell the future and tell us what's going to happen with house prices?
Unfortunately not. I don't have a crystal ball. I know.
Cassie.
Yeah, it's too early to tell, because of the lack of transactions. Really, we're constantly like reworking this every day to try and figure out for ourselves. But I guess estate agents are warning they've seen a fairly significant fall. Estimates vary wildly from 5%, 13% to 20%. It's likely to be different all over the country. So my hometown is probably going to be more impacted than down in London. It's more likely people will be put off buying somewhere new, but as they say, put for a while. I think, you know, people will be a little bit scared about moving and worrying about a second lockdown happening. So they might get caught sort of mid-move, if you like. And people need to focus really on getting back to work and saving again. But there will be still people who need to move and sell, whether for happy reasons like corona babies, or sadder reasons like divorce or debt. So there's likely to be a spike in the market, I do think. You know, people needing to move by the end of the year, which could drive lower prices for buyers who are ready to go. So fingers crossed, but who knows?
Who knows, indeed. But onto some more general kind of money questions. Laura, I guess let's start off with the furlough thing and then move on to self-employed people and that whole issue. Lots of people saying, and we did get one question that said, I'm the director of my own company, so can't furlough. First of all, I'm going to ask you if that's actually true. Other than tax relief, what other government support are they entitled to?
So you can furlough as a director of a limited company. So I spoke to a tax expert about this last week. Basically, although lots of people who are directors of their own company and pay themselves in income and dividends often consider themselves to be self-employed, for tax purposes, legal purposes, you're actually an employee of your company, even if your company is a company of one. So you can furlough yourself as a director. But there are two big problems with it, which might be why the person who asked the question said that they can't furlough themselves. One of the problems is that lots of people have this structure for their work because they want to pay themselves a small income and then more money in dividends. But the furloughing scheme bases how much you get on your income, and dividends aren't included. So it's been quite controversial, and the government has been questioned a lot about whether dividends should be included as income because so many people rely on them. Fingers crossed they might look into that again. It might change, so watch this space. But at the moment, the only money you'd get from furloughing yourself as a director or as someone in a limited company would be 80% of your income, which might not be enough for you to make it worth your while. Because the second problem is that if you furlough yourself, you can't work. So you might be able to do basic admin, your accounts, but you aren't really allowed to do any work that brings you an income, which for lots of people is problematic. You don't, you're not going to want to lose your clients. You want to be working on trying to make some money for next year. So that's a real challenge. There's a couple of workarounds. Martin Lewis talked about this last week, that if you're furloughed, you are allowed to work elsewhere, just not for your company. So you could get a job, you could roll your company up and get a job somewhere else. Or, which this is the workaround, you could potentially, depending on what you do, so if you're like me, you're a writer, and you normally charge clients through a limited company, you could work as a sole trader instead, set yourself up as a freelancer and keep your clients, do the same kind of work, but do it as a freelancer rather than as part of your limited company. So that is a possibility.
And do you have to officially register yourself on HMRC as a sole trader in that capacity if you do it that way?
I think you probably would have to, yes. I don't know 100%, but because it's a bit of a workaround, but it's worth exploring. But I think you would have to, because you'd have to pay tax on it. So you would, and it would be too late for you to get any self-employed help. But if you were just worried about, you were desperate for the money and you were worried about keeping up clients and work and that sort of stuff. The other one is that you can furlough yourself for a minimum of 3 weeks. So you could, it's a bit annoying, but you could furlough yourself for 3 weeks, then take yourself out of furlough, do some work, and then furlough yourself again. There's nothing to stop you doing that. But yeah.
And then just on people who are, and then what other government support will be available to them?
So not lots. I think this is what's the challenge for people in this position. There's a tax, well, it's not a break, but you've got longer to pay your tax. So this is slightly different actually. This is mainly for sole traders, but if you do self-assessment, you've got until January 31st to pay your tax bill. Normally you'd owe tax at the end of July. So that might help with cash flow. But obviously you're still going to owe the money. You've also got longer to pay VAT if you're VAT registered. Otherwise, really, your main option is universal credit, which doesn't pay a huge amount, but a lot of people have registered to get it now. They've relaxed the rules slightly, so it is easier to get universal credit. And they've changed the threshold for the housing allowance, which has made it more generous. So they'll pay us a reasonable amount of money, which you could use towards your rent, for example, if you're a renter. So yeah, your options are limited. That is a real group of people who are going to be struggling at the moment, I think.
Just a couple of questions on that. If you're furloughed and employed, is the same option available to you in terms of registering as a sole trader and doing some freelance work there as well?
So if you were furloughed as an employee of a company?
Yeah.
I believe so, because you are, in theory, if you're furloughed, allowed to work elsewhere. So I don't see why you couldn't, no.
And then the other thing is the universal credit. I know that for a lot of people, the fact that they had savings, you talked about relaxing the rules, the fact that they had savings meant that they weren't entitled to it, but actually that policy's recently been changed.
Yeah, so normally, and it's still kind of the case, that universal credit's for people who don't have much savings. So if you've got £16,000 or more of savings or assets, you're not entitled to receive any universal credit. And if you've got any more than 6,000, how much you get will be reduced. But they've taken the point that a lot of self-employed people particularly will have savings for the tax bill, which isn't, that much disposable income. It's business costs. So the government has said if you could prove when you're applying for universal credit that your savings are business costs or are for your tax bill, then they won't take them into account. So that's good news.
That is good news. in terms of the tax sort of holiday that you get in July, is that something that we're going to have to apply for, or can we just assume we don't have to pay it, or how's that going to work?
Yeah, it's automatic. So normally you owe payment on account, which is half of the year before's earnings by July 31st now. And if you don't pay it by July the 31st, you'd be penalised. Now you won't be penalised. So you don't need to do anything. You don't need to apply for it. You don't really need to contact HMRC. Just owe at the end of January, basically.
And then in terms of that's the one thing I've totally forgotten what I was going to say. We'll come back to it. HMRC, the self-employed that are going to get 80% of their profits, average profits over 3 years, that's going to happen automatically as well in June the 1st, which, to give Rishi Sunak some credit, he couldn't have created a more kind of authentic self-employed experience than to say you have to wait 3 months for your money. But he's saying June the 1st, and that's going to be automatic as well?
So they're going to contact anybody who's eligible. So you'll hear, they haven't given a date, but mid-May-ish. So you should find out. I think it's believed that you'll hear through the online portal. Is it the government gateway? Whatever it is that you log into to pay your tax online.
Like really user-friendly
yeah, exactly.
website.
So you should get a message through that, and then you'll be able to apply for it. And then it will just be transferred into your bank account in one go in June. So it should, it remains to be seen how straightforward that is. As you say, is it going to be a pain in the ass, like lots of chasing of freelance payments? But it should, and the amount that you get at the moment will be backdated to March the 1st, and it will be 3 months. So you'll get up to 2,500 depending on how much you earned. So either, as you said, it's either going to be an average of how much you earned from the tax year of 2016-17 up to the tax year of 2018-19, or based on how much you earn in 2018-19. So there's a cap. So you have to have earned less than £50,000. So either less than £50,000 in the year 2018-19, or if you earn loads in that year but much less in the years before, they'll do an average of 3 years.
And that's profit, isn't it?
Yes, exactly.
£1,000 profit, and the average will be over your profits, which is again kind of annoying for self-employed, because I guess to a certain extent, you do what you can to keep your profits down, or to look like they're down, so that you pay less tax. And of course, now it's going to come back.
So it depends. I mean, for some people it might be good because they might have actually taken home more than £50,000, but their profits are less than £50,000 because their business expenses are high. But yeah, you're right. For some people, it will mean it's reduced significantly, and then they won't get as much money.
Finally, on the self-employed thing, do you think that there is going to be any more kind of policy making to support those sort of individual limited companies, if you like, the ones that have really fallen through the cracks, or do you think that that is really all they're going to get? So
there's a government minister who talked about this last week and put forward this case about dividends and said dividends should be included, because what they've said is that they can't differentiate between dividends as income and dividends as return on investment, and that's been the issue. So there is some kind of backlash against that. So you might well see them change that. The other issue that people are cross about is that that there's this hard threshold at 50,000. So people who've earned 51,000 aren't eligible for anything at all, which obviously seems tough. And also another big issue is that they're basing the self-employed money on those who did tax returns for the year 2018-19. We're obviously now into the tax year 2021. So there's people who've been self-employed for a year but have just started being self-employed after April 2019 who won't get anything either. So there's a discussion about whether that's fair. It remains to be seen whether they do anything about it. At the moment, no.
I suppose the good thing is at least somebody's having the conversation, somebody's bringing up the questions.
Yeah.
What about pensions? So if you are employed by a company and you have been put on furlough, we had a few questions through asking, are employers still, are they still expected to pay your pension while you're furloughed?
Yes, they are, but only the minimum that they have to. So under auto enrollment, which is now the program where everybody who's got an employer is enrolled into a pension, there are minimum amounts that you have to contribute and the employer has to contribute. Now, furlough does include a pension payment and national insurance payments, but what seems to be happening is a lot of companies will top those pensions up, so they'll have more generous pensions, and a lot of companies are stopping doing that or cutting their pension contributions, which I guess is to be expected if they're trying to cut their costs. But yeah, you might find that you've got a less generous pension than you did before you were furloughed, but they have to pay the minimum amount, yeah. Which is why actually it's quite a good idea at the moment, however tempting it is, unless you're really, really stuck and you can't afford the basics, to try and stay in your pension. Because obviously the temptation is to come out of a company pension, or if you're self-employed, stop paying into it. But you will lose that top up from your employer and the tax benefit. So if you can possibly try and stay put in your pension, it's a good idea.
And I've never really had a proper job, so I don't know this, but if a company does decide to reduce its pension payments, do they have to be open and tell you about that, or is that just something you'll discover on your paycheck?
I think they should tell you. I'd be surprised if they don't. I imagine that I don't know 100%, but I imagine they'd have to inform you of that.
The other thing, you mentioned a little bit about it in your intro about kind of ways to say, and audits and things, but right now, if people are really trying to save money, what are your top tips for kind of pulling back your finances, trimming, doing that audit thing?
Yeah. I think looking at debt, so obviously mortgage, we talked about mortgage, but a lot of people have savings but also pay off interest on debts. So they might have a credit card that they're chipping away at and paying some interest on because it feels uncomfortable to dip into your savings. But actually you'll be wasting so much money if you're paying any interest on any bank product other than your mortgage. So if you possibly can, try not to try and pay your credit card down before you dip into your savings or with your savings, because otherwise you'll just be wasting those money. That banks are offering holidays like mortgage holidays on loans and credit cards, and most of them will now offer a £500 interest-free overdraft. So if you're really desperate for cash flow, that's a good option. But the problem is you will just have the interest deferred for a few months and it'll end up being quite expensive in the long run. So I think that's a good way to start. I think a lot of us have debts and don't acknowledge them, don't face them head on, and have no idea what the interest rates are on them. So that's quite a good place to start. Bills as well, like I said, I've just been through all my bills that I've ignored for months and just pay them regardless. And actually things like, it's really tedious, but if you've got a bit more time at the moment, broadband, mobile phone, Netflix, subscriptions. I mean, you can't get rid of Netflix.
It's the only thing we've got left.
But check you're on the right. Well, I had no idea that it had gone up recently. I mean, obviously I was like, fine, leave it. But, have a look at those things. There's some good apps. I don't know if I mentioned these earlier, but like Money Dashboard is quite good at looking at all your accounts in one place, so you can see all your savings and your debts in one place. There's two apps, one called Bean and one called Emma, that are quite good at spotting recurring payments on your account that you sort of ignored and help you cancel them. So I think, and if you do have savings, I think it's a challenge right now because the base rate's really, really low and interest rates are going to fall. So you're really not earning much return on your savings, but trying to get the best that you possibly can while keeping savings sort of accessible is quite useful at the moment, also because I think we need to try, if we possibly can, to keep some emergency savings back, because we just don't know how long this is going to go on for, or whether, in a year's time, we're still going to need a bit of a buffer. So I quite like regular savings accounts. They pay the best interest rates if you kind of drip a bit of money in each month. So they're quite good thing to look at.
One of the things that we've done, and I'm actually going a bit off script now, so sorry for throwing in random questions. We are going to wrap it up soon. But in terms of one of the things that we were advised to do, and I hope it was the right thing, is kind of consolidate any credit card debt you have on sort of balance transfer cards and stretch out that way. Sometimes that's a really good way of reducing your kind of debt payments in terms of not having to pay any interest. Would you advise looking into things like that?
Yeah, definitely. Basically, try not to pay interest on bank products apart from your mortgage if you possibly can. There are, like you say, loads of 0% cards available. The problem with them is they offer really good deals because people take them out and then forget to pay them off and you get charged even more at the end of the term. So yeah, definitely take one. Just make sure you know when it's going to stop being 0% and that you've got a plan in place to pay it off by the end. And have a look at the fees for balance transfer cards. They can really vary, and some of them don't have fees, but they'll have a shorter 0% term, so kind of weigh that up.
And also, just going back to you, Cassie, what about, I don't even know if it's possible, but is remortgaging an option to kind of consolidate debt? Is that something that people could think about?
Yeah, definitely. Louise is also on the call, by the way, as well. So Louise, feel free to chip in if you want to add anything to this. Louise is one of our case managers at Habito. We do see a lot of customers remortgaging for debt. It is a good way to consolidate your debt and get like a cheaper rate, but it is again dependent on your circumstances. So if you want to obviously release some cash for property and stuff, that might be a little bit harder at the moment because they will ask the reason why you want the funds, and it's unlikely obviously if to sort of give you money to help you through this period, so it would have to be something like an extension or something. So it is a good way to do it, but it can potentially be more expensive. So I would say to look at options to stop or reduce payments rather than borrowing more. So you can remortgage to save money, but maybe use your savings to knock money off your mortgage, as Laura mentioned, rather than so you can get mortgage free faster rather than sort of adding to the debt. So
brilliant. Is there anything, Izzy, I'm just going to come to you. Did you have any questions come through that we haven't touched on?
Yes, I'm just looking through them now. We've had loads, so thank you to everybody who's posted. I'm just going to go to one that asks specifically what people can do to improve their credit score during lockdown.
Oh, that's fun. Laura, should we go to you on that one, maybe?
Me? Did you say?
Let's try there first.
Yeah, okay. I think the basics of credit scores is make sure that you're on the electoral roll, which make sure you're registered to vote, because often when you apply for a financial product, where you live will be matched up with the address that's on your credit file, and if they don't match, you'll struggle to get a loan. So that's really important. I mean, I would say predominantly make sure you check them up front, your credit files. You've got 3. Lots of people don't have a clue what's on there, and if there are any mistakes, you can add a note and correct that. So for example, you missed a bill 3 years ago, because things like that stay on your credit score for up to 6 years, and it was because you lost your job, and then now you're in a best position, then you can make a note on there, and so that banks will be able to see that you're a reliable borrower.
Where do you find those credit scores, just out of interest? Is it really?
Yeah, so there are 3 credit reference agencies: Equifax, Experian and TransUnion. So you can go onto their sites. There are other organisations like ClearScore that will help you check those files, but you want to try and check all 3 of them to see what's on there. I think important, try not to, which is obviously a challenge in this particular period where people are really worried about money, it's quite important not to miss bill payments, even if you're struggling, because they, like I said, they stay on your credit score for a long time. Even if it's, I've seen cases, so I used to do write about consumer problems with the Times, and I saw so many people who had been in a dispute with their energy company, and it had cost them a mortgage because they hadn't paid a bill out of protest, and then it stayed on their credit score. So it's quite important. Also, applying for too many products. I mean, this is probably something Cassie can talk about, but if you want to get a mortgage soon, or you want to take out a loan soon, I've seen cases where somebody applied for 2 new current accounts and a joint account and ended up being rejected for a more affordable mortgage because they had applied for too many financial products at once. So that's not a terribly good idea either.
So I guess it's reduce any bills that you definitely don't need. Try and get rid of any bill payments that you don't need. Make sure that you are taking this time to kind of get the best deal on all of your utilities, mobile phones, all of that sort of stuff. Check your credit score rating, and make sure it's up to date, and make sure that where you can, you're paying the bills that you need to pay, but keeping those as low as you possibly can.
Yeah, and I mean, I'm using this time to force myself not to shop at all. So I'm on like a proper freeze. All I'm buying is food and wine, which is necessary, until the end of June. But you know, it's a good time to do that, I think. So I think there will be some people who find they're saving quite a lot of money at the moment because they're not spending in the same way. And I think it's what will be quite interesting after this is whether it's helped us all be a bit more mindful about how we spend our money, because I think I go through life tapping and like being busy and spending money on stuff that I'm actually not that fussed about, and being in a lockdown does make you prioritize and think about what you miss and what I long to spend money on in a few months' time and what I could probably live without. So
yeah, I have to say one of the most joyous moments was going through our direct debits and just being able to cancel alert, like kids swimming, cancel, ballet, you know, all of those things. It's like immediately saving money. It felt great. Is there anything more that you want to add, Cassie, there, or are there any more questions, Izzy, that have come through that you feel like we should touch on?
So I think quite a few of the questions are related to people's personal circumstances, and I think probably the best thing, correct me if I'm wrong, Cassie, would be to get in touch directly so that we can kind of pinpoint their exact situation and help them take things forward. So that would be the advice there. And to anybody who's asked about resources and names of apps and things, I think we'll put them all up on our social channels afterwards. So Kat's at Not So Smug Now, and then Habito is at Habito Loves Homes. And then on our YouTube channel tomorrow, we'll put some more resources and tips that were covered today. So hopefully that covers off most things. Cassie, did you have anything else you wanted to say?
No, not really. Just I guess on the credit score part as well, trying not to take things such as payday loans at the moment if you are struggling. That hugely impacts mortgage applications. If you are struggling with any bills, get in contact with the lender, any debts at all. It's not just mortgage holidays that are happening, you know, we're seeing holidays on credit cards and stuff like that as well. So get in touch with other people, and also try not to go over overdrafts. Again, get in touch with your bank if you are using your overdraft facility, because little things like that can impact mortgages quite severely. But also, if you do have little bits of credit issues, don't worry, it doesn't mean you can never get a mortgage. There are still lenders out there who deal with people who have not so great credit ratings, so it doesn't mean you can never get one. So
okay, amazing, thank you so much. I think just to reiterate, if you are worried and if there is anxiety, then please pick up the phone and speak to somebody, because I think a lot of people, like Laura said, bury their heads in the sand. I mean, I've done it, and actually when you do contact those people you owe money to for whatever reason, generally, like Cassie says, there are systems and things in place to help you and support you. So please, whether it's Habito, whether it's your utility company, whoever it is, call them and see what help there is, because actually the good thing about this is more than ever, there's more help now for us if we're struggling than there ever has been. So so definitely if that's something you take away from that, I'll be really happy. As they say, we'll be following up. If there's any other questions, feel free to submit them to me and I can throw them out to the people who need to answer them, who are way cleverer than I am. But yes, other than that, thank you very much for your time.